Hello friends! Today I'm doing things a little bit differently. This is the profit-taking strategy that I live by, and for that reason I'm going to dive straight into an example of how to use it. After this short clip, I'll explain its principles. Hope you enjoy. Right lads, I am so excited to show you this trading tip. It will make one hell of a difference to your P&L if you use it correctly. What we do initially is we find our entry and we find our stop loss. So I'm just going to use this as an example. It's AMD, it's good stock. I'm going to use it and this line here where it looks like it has the possibility to bounce. So I'm just going to throw in a long position there. Just say anywhere there, that's fine. And usually I would take a lot longer to find these positions and it would take a lot longer to set my stop loss and all that. But this is just an example. So I'm going to bring this right up to the tip here. That's my exit. There's my entry, and I'm going to set my profit and loss or risk to reward ratio. That's right there. So there's my risk to reward. That's fine. So say just going to play out how we're going to take profit in this and how it's going to make you a more successful trader by having more wins and less losses. So say we get our entry. This price comes back down, towards our price entry, and we immediately see buying action. So we see buyers, buyers, buyers. We wake up, say we just wake up, and it's just entered into our price and wicked straight back out. So what we're going to do, instead of hanging around and letting the trade play out, we're going to go straight in and take profit. So that's 1/3 of our position is now going to be taken as profit. Of course I set my writing to white because I love white on white. So 1/3 profit taken. What we're going to do straight after that is our stop loss now gets moved back to our entry point. So we have immediately made this a winning trade. We've taken our profit, we've our stop loss back to where we entered, so we can't lose any money off this trade and we've already made our profit. So if the price wicks back down, goes straight through, we're still on to a winner. We don't care. So say now over the next couple of days, couple of months, however long it takes, it eventually hits our target. That's our target there. We're done, we're happy with our trade. But there's always the fear of missing out. So instead of that, we're going to exit 1/3 of our position again. So we're going to sell 1/3 instead of the rest of our position, because we always have the fear of missing out of what could have happened. What's the upside of this? Sure, it could bounce straight back down. We could feel here, right, we've had a ride, we've gone along with this, we're just going to sell now. But what if it goes higher? There's always the what if case scenario. So with our last bit of position there, we're just going to let the trade ride. We're going to keep it on the table until we feel necessary to close it out. And that is the way you make successful trading strategy. You've reduced your risk here, you've taken your profit, you've closed your position, and you're letting the rest ride. This is a strategy that's going to make you a far more successful trader, give you the mentality to be a better trader by having more wins and less losses. The whole key of it is raising your stop loss after you've taken profit. This can be anywhere, this take profit. Now that we've watched through my example, it's time to talk specifics. Firstly, I would like to say that this profit-taking strategy is not exclusive to any trading analysis style. However, I find it to be very successful when trading horizontal levels. This is up to you though. To start, you'll need 3 things. Number 1, a trade entry price. Number 2, a calculated stop loss. And number 3, a price target. Ideally, we look for a greater than 3-to-1 risk to reward ratio, but each to their own. Nextly, we will look to trade the trend. To do this, we zoom out and look at the larger picture outside of our trade. Now, the principle that this strategy is built around: take profit when the market makes it available. Let's say your entry gets filled and the market immediately reverses. This is when we take profit. The amount of price rise or price drop, if shorting, that is required is up to you. But make sure that if you are onto an immediate winner, you take profit. At this point, it's important to state that we will be splitting our position up. Our position must be divisible by 3 in order for us to split it in thirds. The first third will be our initial take profit point. The second third will be taken off the market once our target has been met. And finally, the last third will be our hot shot, as I like to call it. This is to relieve any FOMO we may have if the market continues to rally. It is up to the trader when they decide to close this third off the trade. Now, the truly special part of this strategy. This is what will make you a more successful trader. Once you have taken profit, you then move your stop loss up to your entry point for the last 2/3 of your trade. This move ensures that you're in a successful trade. I cannot stress enough how amazing it feels to be sitting on a trade, knowing it is already a winner. This, paired with a successful trading analysis style, or edge as I call it, will ensure your trading success. This strategy ensures that your wins will outweigh your losses, so long as your trading style is sufficient. If you have a successful trading style already, you will probably notice that reversals usually occur once your bids are filled, with price moving in your direction. Now with this trading style, you can ensure that they stay as winners, even if they go against you afterwards. Hey lads, if you like this video, please like and subscribe.